This breakfast is going to focus on, I think, what many of us find one of the most intriguing developments in this whole fintech revolution that's going on, not least because it seems to have potential so much broader than fintech, which is the emergence of blockchain technology as a potential game changer in finance, but in lots of other industries. And this panel is going to, I think, lift our eyes to the horizon, but also plot out a path to get there by pointing out where we are actually at the moment in terms of developing blockchain pilots and starting to take them into the mainstream. Melanie, I'm going to start with you. I'd like to get a sense of, maybe you can just define blockchain for the audience. I think most people are aware of it, but exactly what it is would be helpful, and then maybe talk a bit about where you see the most exciting opportunities.
Sure, thank you. Setting context for this Economist conference on fintech and blockchain, fintech, financial technology, has been any kind of technology applied to financial services. And traditionally this meant in the back office, but now it means innovation in any kind of financial services sense, which also may extend well beyond financial services markets. And blockchain within that is fintech par excellence. So blockchain is a fairly recent innovation, and it's a software that allows the instantaneous transfer of money or property via the internet. It's essentially a secure automation technology that applies to any kind of industry. It's not as much an industry itself as an enabling, modernizing information technology for all industries. And blockchain pertains to the spot market and the futures market in the sense of immediate transfer now in the spot market and the cash market, as well as a futures market in the sense of any future financial obligations like a mortgage or a treasury bond that can be handled via smart contracts. So blockchain is really a fundamental innovation that's allowing us to transfer value via the internet. If the first internet phase concerned the transfer of information, this second phase concerns the transfer of value. It's very, very important and significant for all industries.
And I think, the thing that excites many people most about this is that there's a high degree of trust is sort of built into the software. The Economist, shortly after last year's Finance Disrupted meeting, ran a cover story called "The Great Trust Machine" and described blockchain as the chain of being sure about things, which I thought was I think very much catches the essence of what people are excited about here. Where are you seeing the most activity in terms of trying to implement this at the moment?
I think with blockchains, there are really four main markets: financial services, and then health and pharma, and then supply chain logistics, and then Internet of Things sensors. So the trust-making quality allows applications like digital identity confirmation that are extremely important in electronic medical records, for example. And so these four markets are some of the largest for blockchain. And further, I think one of the big stories is one of global financial inclusion. So right now, our banking infrastructure really only reaches 1 to 2 billion people worldwide. And it's just not scalable. And so I see blockchain really like a leapfrog technology like cell phones, in that we're not going to build out brick and mortar banking infrastructure worldwide, but we do want to reach everybody with global financial inclusion initiatives, and blockchain can help us do this via cell phone e-wallet applications, initially in financial services, and then I think also in health services. And so I see leader banks already starting to think about reaching different and new markets with technology like blockchain. So I really see it as a modernizing technology for bringing, for inclusion in regard to financial services and health services worldwide.
Now, Eric, there's a lot of talk about, you see almost every company in finance certainly, and maybe a lot of the other big companies say they've got some kind of blockchain project underway. Can you give us a sense of where you're seeing, how many projects there are out there, how many people are doing things around blockchain, and what actually are the applications that seem closest to coming to to sort of more out of the laboratory, in a sense, into the mainstream?
Yeah, so I would say on one hand, we have probably too many projects. On the other hand, we don't have enough. And let me explain why, right? So on one hand, we have a lot of companies doing proof of concept and prototypes around a huge set of use cases. But there is no real...
So what would be an example?
Cross-border payments is a good example, or syndicated loans are two of the big traction today. What's interesting with that is you have a lot of activity, but not really planned to go and commercialize those products. I think that's one aspect of it. I'm saying we don't have enough because I think financial services has sucked all the energy out of the blockchain ecosystem, and we should actually now look outside of financial services to look at the potential of the technology in healthcare, in government, and in other industries.
Brad, I mean, what's NASDAQ's interest in this?
Well, so we started as an electronic exchange, and that was at our root, and then you took something that was human-based and you automated it. And at the time, one of the biggest problems was the physical, settlement of the actual transaction in the back end that took days, and you got it down to you could make a contract, you could make a deal with someone in the market, but then the fulfillment of that was inherently, cumbersome and not scalable. And so the technology that was used at the time was a centralized mainframe database. And here we sit with a centralized utility. So the beauty of the blockchain in everything, wherever you have record keeping, official record keeping needs, and we have them in every industry. So I think Melanie's opening up beyond financial services is wherever there's official record keeping needs, and there's in government and medical and such, but financial services is certainly one where you want to have accurate records. This gives you a different way of thinking about that type of design. And telecommunications, I came from telecommunications, and we were disrupted by peer-to-peer with Skype. And everyone thought that can't be a real telecommunications network because of the way it was put together and designed with such a distributed nature. So I think if you let your mind start to think distributed versus centralized record keeping, you see it becomes very clear where financial services was one of the first industries to be automated because alphanumeric lended itself to that generation of compute. So there's a lot of redesign across the whole thing. In our part, it certainly is around making things global, like Melody said. It's making things happen faster, and I think it also is just modernizing the infrastructure. So the base stuff, and then we can come back to some of the applications and how we think about experimentation and learning, so that we have some progress and can show some real examples of where it can be applied. But maybe come back to Barry, I think is...
Absolutely. So I mean, I first encountered Bitcoin when I was writing an ebook about the future of money, really inspired by how the gold price was sort of inexplicably rising. And people were talking about Bitcoin as a kind of digital gold, and Bitcoin was the way that introduced me to blockchain, because the development of Bitcoin has gone hand in hand with many of the innovations at the heart of blockchain technology. And Barry, you are not only a fan of investing in gold, but also one of the biggest investors in blockchain and Bitcoin-related companies. And I wonder how you see the relationship between particularly a currency like Bitcoin and the broader applications of blockchain. Does it need to have the associations with Bitcoin or indeed Ether, which is the new currency that Ethereum has been pushing?
Well, I think we made it 9 minutes without saying the word Bitcoin, which I actually find...
Is that a record?
Find it really interesting. Who here owns Bitcoin? Put your hand up. Any Bitcoin owners? Proud Bitcoin owners? Anybody own any of the other digital currencies? Put your hand up. Ripple, Ethereum. Okay, a few. I think Melanie did a fantastic job describing what blockchain is. It was I think a very articulate description of the kind of the power of this technology. I look at Bitcoin as really three things. It's a form of currency that has gold attributes, which I'll talk about in a second. It's a financial rail that allows you to move value person to person and company to company around the world very quickly. And then it's a ledger. The ledger can be used to hold information ranging from identity to who owns what value to who owns what syndicated loan. I guess by way of context, so Digital Currency Group, we've invested in 85 companies now in 25 countries. And those companies range from Bitcoin exchanges to companies building identity solutions on the blockchain to those focusing on Internet of Things and healthcare applications, some of the stuff I'm pretty excited about. I'm personally I'm very excited about Bitcoin as a digital currency, as digital gold. I'm growing incredibly excited about it as a rail. I'm highly skeptical around blockchain technology being used anytime soon in production, live, in the financial services space, in any meaningful way in the next few years.
And what do you mean by rail? And then explain the second part.
So you can now utilize the Bitcoin rail to move money in and out of places like India, Nigeria, Mexico, Indonesia, where there are services that will abstract out you ever touching Bitcoin. So they will essentially, you send USD to them, the money ends up in mobile wallets in Nigeria same day. You don't know how it happens, but what's actually happening behind the scenes is a service provider is going USD to Bitcoin, Bitcoin to Nigerian Naira? I don't know, Naira, sound right? And then they're distributing it to the mobile wallets in Nigeria. And that way that happens is you have to have on-ramps and off-ramps, so exchanges on either end of those corridors. That was not possible 18 months ago. 18 months ago, you might have had a few exchanges, but they were trading $1,000 a day. Now you're seeing exchanges around the world in all the important corridors with a lot of liquidity. So we're seeing massive growth in volumes using Bitcoin as a cross-border payment rail where the sender and the recipient don't even know it's being used in the background. So that I'm very excited about. That's an actual use case that's solving a real problem, saving a lot of time, saving a lot of money. And I think from an economic inclusion perspective, from a good for society perspective, I think it's going to be transformative.
But do we have to have Bitcoin as part of this solution?
So you have to take a step back and understand that there's kind of two camps here. You have what's called a decentralized, permissionless, open protocol like a Bitcoin or Ethereum, and then you have a lot of efforts creating private, federated blockchains, whether it's a few banks or a consortium of stakeholders. I personally am excited to see interest and focus by the banks around these private consortiums, but I personally believe that while it will provide incremental improvements, it's not going to be game-changing, transformative. We're not going to see real innovation coming out of those efforts. If you've ever traded a financial asset that's kind of paper-based, it's crazy that it takes 30 days or longer sometimes to settle these things. Making that electronic, putting that in a shared database, it's interesting. It would save the banks some time and money, but I don't think that's transformative.
Brad, do you share that view?
With the consortiums? Generally, yes. I think it's really tough. I think there's likely to be some positive work around standards coming out of the consortiums, and I think to make this a global network, you do need some standards. So like with what we had in the networking world, standards are necessary for interoperability. So I think likely you will get some positive work out of consortiums for standards, but not necessarily. I agree with Barry about the innovation usually comes where there's a need to be filled, and I think he articulated a very real need about cross-border at low dollar amount, and there's also a lot of disruption around the world where people want to take their money and put it in a place that they can get access to if they're no longer living in that country. And then what Melanie said, the unbanked, the rest of the world at a price point where you can actually provide that, and it's a leapfrog from a traditional high-cost developed country banking system. So I would say that likely the takeoff an accelerant will come from something that is absolutely unfilled and the technology is perfectly suited for. And I like to use my background of Commerce One was going to replumb the supply chain of the 3 major American automakers. And there was eBay. And they were both doing the exact same thing. And eBay ended up solving a problem of global swap meets and garage sales. And that looked like a silly little application, but it turned out to be very valuable for collectors and very valuable for reuse and resell of things that you would normally throw in a dumpster. And of course, we know Commerce One went out of business and pretty much failed, and eBay was a success. So I think you look at where innovation happens, and it happens in simple ways in simple places where there's real need. PayPal, the same thing. There was real need for person to person at the time. So I would say that financial services is a difficult place. The established developed country financial services are going to be very difficult to replumb and do it quickly. So your time frame.
Yeah, and especially if we go into a recession, into an economic downturn, these are going to be the projects that are killed first. And we're already starting to see the very, very talented individuals at the banks working on these projects leave to go to the startups.
Clearly, I mean, payments is a large revenue stream historically for the financial services industry. So, I mean, I think there's going to be, presumably, significant financial loss, which will trigger innovation, won't it?
What I think, though, the vulnerability in consumer financial services today, and I'll say consumer banking, is the products. There's a whole lost generation that doesn't understand why they need these products, because interest rates, they didn't grow up with the magic of compounded interest. So you have all these partitioned, you really want your money, you want access to your money. So I think there is something in the US for a generation that has no idea why these banks offer these services in partitioned buckets that seem to be really artificial and annoying. If you get the wrong dollar amount in the wrong bucket, you pay a fee. So I think someone will, but it's not going to probably be the mainstream banking service that will replace B of A, Wells, or Chase, but it will be for a group of people that just say, you know what, I'm annoyed by savings accounts, checking accounts, CDs. I want one account that I have access to my daily funds. So there's some innovation openings there.
I think what's interesting is I don't think we're going to have one solution fixing everything at once, right? I think we have to be very specific. So in developing markets, yes, those solutions might be a great opportunity for people to get into the financial system, right? Low transaction, low fees, don't access to financial services, and low regulations, right? In the US, I don't see a need for blockchain to actually enable domestic payments because we don't have an issue. It's working today. We will, in the next few years, have, outside of blockchain, faster payments, real-time payments in the US. There is no need for blockchain to be involved here. Where we need blockchain, I think, is cross-border payments for low volume transactions. So when you talk about banks, you say, well, they don't serve those customers today or very limited. And on the commercial side, cross-border payment commercial side, we are not going to use blockchain anytime soon because you have a lot of regulations and other things. So I think you have different level of adoptions and speed of adoption depending on the use case within payments. It's not one solution for everything.
So what are the questions that people are coming to you with most often, I mean, at the moment in this area?
Well, the first question is, it's really three. The first one is technology, right? The technology is still changing. So where should I invest? Should I invest in Ethereum, in Bitcoin, or should I invest in my own blockchain, private blockchain, and do my own thing? And what about the next generation of those technologies? So the technology being changing very often still, I think that's the first set of discussions that we are having. And what we are saying is let's build some architecture that are very flexible and modular. So if one technology comes in and is better than the previous one, then you can plug that technology into your environment. So that's the first set. The second set is the regulatory aspect. That's a huge concern from all of our clients, regardless of the industry, really. What kind of regulations do you have, and what kind of regulations do I need to comply to? A good example of what Barry said is the cross-border payment using Bitcoin. There is no regulation for that today. I mean, I don't think the companies that we are talking about have a very strong regulatory framework to actually transfer that money. So something is going to happen to catch up with them. So that's the regulatory aspect, the second one. And then the last one is, which is to me very important, is are we fixing something that's broken? Are we fixing something that need a new technology or a new solution? And I keep joking about this, but a year ago in those panels, we were trying to convince people to use blockchain. And today what I'm doing is I'm trying to convince people not to use blockchain, because I keep saying, no, for this, you don't really need blockchain, right? You need a better database or a better workflow. I think that's the three big questions we are talking about with clients.
And a year ago here, Larry Summers was saying something to the effect, I'm paraphrasing, that when you look at things that currently could be settled instantaneously, whether it be a share transaction or a payment, that probably accounts for about a third of the revenues of the existing financial services industry, and it's not obvious why any of that needs to exist if you really buy the blockchain analogy. I mean, is that right, do you think?
Oh, I don't know about the number,
yeah,
but
broadly
the idea is
magnitude.
to say between authorization, clearing, and settlement, today it could be minutes or it could be weeks between the beginning and the end of the transaction. If you squeeze that into minutes, then you remove a lot of risk, you remove a lot of cost, and whoever is providing that management of the risk between the beginning and the end, do we need to keep those people around? I don't know. It's going to take time to get there.
Look, I think this is I think peak blockchain hype. Bitcoin had it in 2013. My prediction is 2017. We're going to go back to digital currency, Bitcoin and others being the focus as an investable asset class. In a world of negative interest rates, 13 trillion of negative yielding debt, and places for people to put their money, that's not going to be impacted by what will likely be kind of an economic downturn. It doesn't take a lot for currently there's a digital currency as an asset class is about $13 billion, 13. 13 trillion of negative yielding debt where you're paying somebody to hold your money, 7.5 trillion of gold where you're paying for storage. It's not crazy to think that some large amount of money may move into this asset class. I personally think that Bitcoin is likely going to be the winner. And I think next year, the narrative is going to change. Like I joked, it took 9 minutes for us to say the word Bitcoin. Like Bitcoin is still a bad word in a lot of circles. It's gonna change. The narrative is going to change, and the question is not going to be, how to use blockchain technology. The question next year is going to be, what portion of my portfolio should I have in this new non-correlated asset class?
And if you're talking about sort of hype in this area, I guess Ethereum came out of the blocks running earlier this year. There was this sort of great excitement about this alternative to Bitcoin that seemed to be very respectable with IBM behind it and everything, and other major firms, and yet there's been a lot of scandal around this the Dow fund that was basically had to be shut down. Do you think Ethereum is gone, or is it going to come back?
I think the idea of smart contracts, which is basically coding into one of these protocols an if-and statement, so if this event happens, money gets released. I think that's interesting. I don't know how many problems it solves. Ethereum, so Bitcoin is there's about $10 billion of Bitcoin in circulation. Ethereum, there's about $1 billion right now. I think Ethereum, while the founder is a genius, and there's some very talented developers working on it, there's really, in my opinion, no support for a $1 billion valuation for a token that actually doesn't have any value. I think we'll see some interesting projects and companies come out of Ethereum, but I think they've done a fantastic job creating an interesting marketing narrative around it, and essentially attracted a lot of people who missed out on the run of Bitcoin from $1 to 700. People are just chasing the next Bitcoin.
So Melanie, I mean, the reason we're talking about these digital currencies, Bitcoin, Ethereum, and so forth, is because if you're going to keep this ledger updated, someone has to spend the money on updating the ledger, and it's either this public approach where a currency is available to be mined technically, and those people who are doing the mining are basically keeping the ledger updated, or it's the private approach where people who don't need to be rewarded through currency pay to update the ledger. I mean, how do you see this potential? Are we going to be able to move? Should we want to move away from the public blockchain to a private one? And what actually? Who's got the real incentive to keep that, to make those private blockchains work?
So I hear you ask about public and private ledgers, which have been discussed by already on the panel. And so I really see this as, and several of these questions we've just addressed, as a question of perspective, of having a long-term perspective. And so something like blockchain development is really just in its early years. So something like the internet took 20, 30 years to fully roll out. And in terms of transferring value, securities and money via the internet, that's much more complicated and has much more risk. And so we're in the early years of building the new internet plumbing to do this. And so while a $10 billion Bitcoin market cap or a $1 billion Ethereum market cap is a small drop in a global financial services market, with a longer term perspective, these are important early developments where we're prototyping the software live in internet markets that are under constant attack. So in the early days of the internet, it was not uncommon to have Alta Vista, a site, down for a week due to DNS attacks. And so we're seeing now these same kinds of attacks on Bitcoin software or on cryptocurrency software, and it's making we're sandboxing these applications for cryptocurrencies in real time and making the network and the software more resilient. We're learning as we go. And so public and private ledgers are just like in the early days, CompuServe and AOL offered a walled garden, controlled experience of the internet. And this is very much like banks are uptaking private ledger technology, blockchain technology now. So the early implementations are definitely more of a governed, controlled experience while we test out and develop the functionality in the market. And then, as was mentioned, on the longer term, the real revolutionary developments come in the broader open pseudonymous ledgers, where the longer term technology benefits will be clear.
I think it's not going to be a one or another. It's going to be public blockchain for certain use cases and private blockchain for other use cases. I don't think we're going to end up with one standard for everything. And I don't think we should even try to get to one standard for everything, because it's going to be too hard to get there. If we want to generate adoptions, we need to get very specific cross-border payments and say, for cross-border payments, that's going to be the standard that we are going to share, and then move to the next use case and say, for syndicated loans, we're going to use that kind of standard. Because if we try to fix everything at once, we'll never get there.
I'm going to turn to the audience for questions in just a minute, but I just want to ask Brad one question. In your remarks, you've mentioned both Skype and that's just its disruptive power, and also eBay, and how that managed to take off. As you apply that kind of thinking at NASDAQ, I mean, what does it look like to you? How where you're expecting to see the kind of disruptive adoption by the consumer?
Yeah. What's that?
The
killer app. So we're a very misunderstood brand. NASDAQ obviously every day is emblazoned about, did it go up or down? But we're the technology provider to other exchanges. So that we have a technology business called Market Technology, and as we look at that, those in my mind form nodes, global nodes around the world. And today they're not interconnected necessarily, and you start to see examples where certain exchanges are just doing point-to-point connection. So you can have interoperability across these. Think about the early days of local area networks where the departments put in the network and they got all this benefit because they could work together better. And then Cisco created a ability to interoperate. And that was the first iOS, by the way. They had iOS was their operating system, and Apple took it and never paid Cisco, or maybe they did. But that was the real networking enablement, was interoperability of multiple protocols. So that they built a way to internetwork. We look at it that way, and so coming from telecom, I look at it as a networking problem. And I see that, I have technology and nodes around the world, and it's going to be very easy with any protocol, and we'll do multi-protocol, that we'll start connecting it so that you can do global collateral management. And I think collateral management is a record-keeping function. And it's very inefficient. And if you look at all the transactions just to collateralize something, it's incredibly messy and kind of batch-oriented in many cases. So we think and end of day, arbitrary kind of ended day, let's settle up, let's figure out where we are. So I'm looking at it that way, very excited about how we apply that from a global standpoint. But for me, it's a network opportunity.
So the question was, there've been a lot of high-profile examples of teething problems, such as sort of hacks of exchanges and the Dow
Yep,
fund.
I'll take it.
Well, is this symptomatic of a longer-term weakness?
First, separate hacks of protocols versus hacks of the companies. The companies, those that store value, wallets, exchanges, they are fantastic targets for the bad guys. And so the bad guys have been successful in penetrating a lot of the defenses of some of the early companies. And then, we went for a year and a half, 2 years without a major hack. And then a hack happens with a Bitcoin exchange in Hong Kong. Those hacks have happened with less frequency. I think the reason why is these companies have been built in an era where they had to basically build a business from scratch, thinking of all the attack vectors. And so, every Bitcoin wallet and exchange has things like two-factor authentication, whereas I think my bank accounts and brokerage accounts don't even have that, which is interesting. The protocol itself, Bitcoin, has never been hacked. The biggest issue that Bitcoin has right now is the transaction volume has grown too fast for the network to handle it as efficient as it once could. So there's a lot of discussion, debate as to how to scale the network, high-class problem. Ethereum, on the other hand, actually, it was designed to kind of move fast and kind of break things, and it has been breaking recently. And they've forked the protocol. They're talking about doing another fork of the protocol. So again,
by forking, you mean sort of just changing the software definition a bit to allow more volume, essentially?
The reason for forking is different in each case, but it's essentially trying to fix problems in the protocol that could not be fixed through basic code changes.
Yeah. So I would say I encourage everyone who hasn't read the original paper, just go Bitcoin in Google and PDF. You'll get the right version. What's really exciting about that, and it's only, I think, how many?
11 pages.
Yeah, 11 pages.
But there's the original Satoshi paper.
Yeah, and it's exciting. It's designed with some of the leading concepts of security and some of the most brilliant PhDs that it's built on more secure versus it's just you can't get at my database and that's how I'm going to secure you. That's today's financial services model. So it's far more thoughtful at the protocol level of having security built in. And I would then venture, if you think about, it's great news to talk about what's happened in this world with hacks, but if you think of credit cards, and I'm going to use one more time the telecommunications example. So I have finally gotten chips in my cards. And if you read about it, the fraud is plummeting. And that technology we had every time you drove across the Bay Bridge, you got your phone in 1995, it was cloned. And second generation phones had those chips in 20 years ago, and cell phone fraud went away. So the credit card industry has been perpetuating this low security payment mechanism for 20 years beyond when they had to. And it's going to be just, it's a harder problem to solve because you have to retrofit at the point of sale. So I understand that. But inherently, technology and security is available to make financial services more secure. And this is one of the greatest architected designs to make it more secure. And that's what's enabling some of the things that Barry's seeing on the Bitcoin rails. So I would say it really is the entities themselves that have lack of security before they write to the Bitcoin payment network.
Yeah, I would just add one thing. So you have the infrastructure layer, you have the companies. I think in the middle you have the smart contracts. And the Ethereum situation was actually a smart contract.
A smart contract is a phrase that you hear all the time, but just give us an example.
So a smart contract is actually not smart and not a contract. A smart contract is if you how many of you are using bill pay to pay your bills every day, right? You bill pay, right? That's a smart contract. It's the ability to pay someone in the future based on condition, and the condition for bill pay is it's the end of the month, right? That's a smart contract. So the translation of that into a blockchain is that you automate the mechanism into the blockchain, right? So that's a smart contract. The challenge.
How does this get labeled smart contract?
I don't know. That's a good question. Maybe we need to rephrase that into dumb marketing logic. But it's what it is. And the challenge, the security challenge, was that the people who actually coded the smart contract didn't do a good job of doing this. Right? So it was not a company, it was not the protocol, it was how do you use the technology? And that's, to me, that's the maturity of the technology and the maturity of the community that's at stake.
Yalman Onoran, Bloomberg News. Pardon my ignorance, but I do not fully understand the Bitcoin technology. I know a little bit about it, but Barry, when you say it can't grow, it's because of the programming and how the coins can grow very difficult. That's why Bitcoin cannot grow its volume. Can you explain a little bit?
Yeah,
let's take another question as well, because I think we don't want to get into a whole tutorial on Bitcoin, but we will. There's another question in the middle there as well, and then we'll answer both of those.
Ernest van Riet from Capitec Bank in South Africa, where incidentally we've had chips in our credit cards for about 8 years now. So you briefly mentioned cutting out the middleman using blockchain technology. So I guess the question is, do you foresee, and I mean the two examples I can think of now is somebody trading on the stock exchange directly through blockchain without using a broker. Now I know it's not that simple, but is that, because if you use blockchain, you could potentially do that. And obviously, I don't know how it works here, but also in South Africa, MasterCard or Visa doesn't switch for us. So again, what do they really do apart from being a trusted kind of source? So do you foresee in time that blockchain technology can sort of cut out those middlemen?
Great. Well, that's two good questions. We're almost out of time, so what I'd like to do is ask each panelist comment briefly on either of those two questions if you'd like, but also in your concluding comment, I'd like a prediction that if we're back here in 5 years' time, what will be the aspect of the adoption of blockchain that we can actually say, yeah, this happened and it's really made a massive difference, if anything. Let's start with you, Brad.
Okay, so let me answer that one very quickly. There's always going to be customers in the equation, and in the customers in markets, it's the company who's raising money, and it's the investor. And there's a lot of intermediaries. Mutual funds are an intermediary for the end investor. So I would say everyone in between, those two entities are going to always exist. Everything in the middle can be replumbed. So yes, the answer is this technology will likely eliminate many middlemen in time. And then the last prediction is you will have this service available in every major cloud provider. So Amazon, Microsoft, and Google. And it'll be something, an API you can program too. So I think there's going to be record-keeping services, blockchain services will be on 5 years from now, you will be able to, as a developer and a new company, use that service and it'll be global.
Eric?
So to that question, I think what's interesting about blockchain is for companies like the one you mentioned, you have to rethink about what's the value you have in the value chain. If your value is to actually just transfer value for your customers, you should be concerned because blockchain is exactly what's going to be. But if your value is to actually enable chargebacks, right, if you are talking Visa and MasterCard, if you're enabling that kind of service, we still need that service, regardless of the technology. So it forces people, organizations, to rethink the real value they want to deliver. And I think that's interesting. The prediction is, I think in 5 years, hopefully you're going to have different people on the panel, because I think you would have people in implementing the solution. So you would have people with a story to tell about the value that they bring. And as a joke, I think half of the room will be gone because half of the room is working somehow in being an intermediary, and you will have another job.
Wow.
Answering the question on the scalability issue, so it's not a value. The value of Bitcoin can go to anything, so it's traded 24/7 on exchanges. What I was referring to is every block that gets confirmed every 10 minutes on average can only contain a certain amount of data, information, and that vessel, that container is capped right now. So if you want to get into the next block, you can pay a transaction fee to get into it, or you can just let your transaction get confirmed when there's the next availability. So right now, the way it's going to be scaled is either that block is going to be increased, the container will be increased in size, and/or there's going to be parallel networks that will allow faster payments, more transactions that reconcile against the main block. That's something called sidechains and Lightning. My prediction would be, I guess in 5 years, Economists we won't have the 8 a.m. breakfast session. We will either be at 3 p.m. or it'll be a whole day conference. And economists and others will have actually looked into the investing economic impact of digital currency and on society. And we'll still talk about the technology, but we'll talk more about digital money and digital gold.
Right. Melanie, last word to you.
I'll offer a provocative prediction for the future that we move to securities as a service. Just like we've moved to music as a service and automobile transport as a service, that the future world could have securities as a service where underlying ownership is no longer required, and that secondarily we have much greater global financial inclusion due to blockchain solutions.